Hi everyone, welcome back to my YouTube channel, Ruby Chahan, your Global Canadian Connect. And today I'm really excited. I have here with me two very special people, two of our own Canadians, the founders of GenZone, Kevin and Cheyenne. And we're gonna talk all things relocating to Dubai, UAE, and setting up companies. They help individuals not only from Canada, but across the world relocate. Kevin and Cheyenne, tell us a bit more about your company and what you guys do. And yeah, let's go from there.
Well, first of all, it's a pleasure to be on your show today, and thank you for having us. I know this is a big step moving forward for you, and you're in Dubai now because there is a huge market here, and that's the kind of market that we've figured out. So what we do here at GenZone is we help people move to Dubai to reduce their taxes legally and to benefit from a higher quality of life. There's a lot more safety here compared to other sectors of the world. And Dubai is just up and coming. If you're trying to make more money and grow as an entrepreneur and grow your finances, this is the place to be. So yes, there's tax benefits, but there's so many other benefits that you will see once you come here. So here with my partner Cheyenne, we co-founded this company together, and our goal is to really change people's lives through their finances.
Agreed. That's amazing. And that's what we do as well. I believe that we're all helping Canadians live their dreams, and we're so lucky to live our dreams with them as well. Being here in Dubai, UAE, and working with individuals, whether they're, of older age, ready to retire, or whether they're young and ready to go on an adventure to set up their companies. It's amazing.
Yeah, I mean, honestly, it's a big decision for anyone, right? Even if you have no assets or if you have a lot of assets, moving to another part of the world, especially for Canadians, we're not just coming from the UK. It's not just a quick little flight. It's a big flight. And for a lot of people that live in Canada, they don't know what Dubai really is. They only know what they've heard about Dubai. People think it's just, like a rich place just filled with oil, and you can't dress this way or you can't act like this. But it's totally different. And it's a lot better than you would expect it. So
I totally agree. I totally agree. It is the 13-hour flight, but once you get here, you will see how life is so different. And we're all Canadians. We are born and bred in Canada. We love Canada. It's always been our home. However, once you start exploring the world and you see the other opportunities available to you and the differences between Canada and, let's say, the UAE, you don't want to go back necessarily. We all love Canada. However, Canada's changed a little bit over the years. I'm sure you guys agree.
Absolutely, yeah.
The only thing that hasn't changed is the bad weather, though.
And the taxes. Taxes
and the
don't
taxes.
change.
Those are getting worse.
Sometimes they go a little bit higher.
Absolutely.
And, the CRA, Canada Revenue Agency, our taxing authority,
Yep.
and also provincial taxes are going higher and higher. And there's new taxes being implemented every single day,
Yep.
such as underused housing tax return for
Brand new.
foreigners and things like that. So tell me, do you guys help individuals from all over Canada, all provinces, or how does that work, and how should they contact you, and what's the process?
Yeah, definitely. So we assist with relocation for Canadians, but we also help people from the UK, Spain, Norway, anywhere around the world. The only people that can't be really easily helped are the Americans, since their taxes are tied to their passport. They can, reduce their tax burden, but if they are still making a lot of money, they do have to pay it back to Uncle Sam. So as long as you're not from the United States, we can assist you throughout the entire process. We'll help you set up your business here the proper way. We'll help you get residency here. We'll help you get your bank account set up, and we will put you in touch with everyone you need, from accounting to legal. We can help you with the entire process because we understand that you haven't done this before. You've probably never even heard of this before. Maybe you have and you're just dabbling into it, but you don't really know the process. We can make sure that the entire thing is smooth, and usually the entire process doesn't take that long, about 20 to 30 days from start to finish. So it's a lot easier than you might expect and a lot cheaper, and it actually makes you money when you consider the taxes that you're going to be saving. Of course, if you do it properly, and that's why you partner with people like us and you partner with people like Ruby.
Yes, absolutely. And I can attest to that. Some of my own clients have worked with GenZone, and they really provide a holistic approach. The connections with legal, the connections with accountant. It's not just a one-time high and buy setup. You really are in touch with them long-term for whatever they need. I really think we should touch on the reasons why Canadians are moving abroad, even though, of course, we love Canada. My opinion is yes, of course, taxes. You know, taxes can go beyond 50%. If you're making 100K Canadian, you're paying about almost 25% as a marginal tax rate.
Yeah.
At the end of the day, you're going to get about $70,000 in Ontario.
Exactly.
Now, if you're making over 250K, your marginal tax rate is over 50%, and you're paying over 90,000 in taxes in Canada. And, you know, it almost seems like the harder you work and the better you want to do for yourself, you end up paying more taxes to the government and leaving less and less money behind for yourself and your family. And life has really changed in Canada. Cost of living is really high. What do you guys think about that?
Absolutely, absolutely. I think Canadians are really looking at the benefits that they can get outside of Canada, because especially for Canadians, their tax status is based on their residency. It's not like in America, like Kevin mentioned, where your tax status is based on your passport, where it's just your residency. So if you do choose to leave Canada, you know, if you have an online business or if you have a business that doesn't hold you to be in Canada, you're able to easily just, you know, change your residency, become a non-resident of Canada with the help of Ruby, and then of course become a resident of the UAE and get those tax benefits with significantly low taxes, only 9% in corporate, which effectively is less. We'll get into that later, but yeah, there's lots more benefits in Dubai outside of Canada that Canadians are looking at. The business opportunities, the taxes, the amazing weather, and all the connections that they can get. So
Wow.
Yeah.
9%. So I know that's the corporate rate. And if you're an employee, it's 0%. So imagine taking home all your income.
Exactly.
It's amazing.
Exactly. And to put a follow-up point to this, because a lot of people are, you know, scared about, 9% corporate tax, 9% corporate tax. But the reality is Dubai and the UAE is still the number one place to have your business registered. And let me tell you why. The first reason is this 9% corporate tax, if you look at it on an effective, you know, basis, let's say you make $1 million, right? That 9% isn't applicable to the entire thing. It's only applicable to a section of it, which means that 9% is really like 7% or 5%. But there's another added benefit. Right now until December 31st, 2026, so we still have 3 years to take advantage of this. The UAE has implemented a small business relief, which means that if you are making under 3 million AED in revenue, which is equivalent to roughly 816,000 USD, you don't have to pay this corporate tax.
Wow.
So if your revenue equals your, you know, your net profit, and let's say your net profit was $800,000 US, there's no corporate tax.
Oh, wow. So they're still taking into consideration expenses for your business. It's net. You're taxed on the net.
absolutely. So salary, for example, that can be deducted wholly. You can deduct entertainment expenses up to 50%, interest on your business. So just like anywhere else in the world that you'd have your business, you can deduct your revenues, and then the tax is only on your net income after 102,000 US dollars.
Amazing.
Yeah, and if anyone's confused, of course, you know, get in touch with us or Ruby. She'd be more than happy to explain it to you, you know, specifically. But basically, there's two things to this. Number one, is your business making more than 3 million AED in revenue? If the answer is no, there is no corporate tax. It doesn't matter what your net income is. If you are making over 3 million AED or 3 million dirhams in revenue, then they go to step number 2, which is how much net income do you have? Is it over 375,000 AED in net income? If yes, then they will only tax you 9% on the money above the 375,000. So 375,000, that's roughly 102,000 US dollars. So let's say you did go over the threshold to not qualify as a small business, and you go over and you make, let's say, a net income of 103,000. So let's say we went over by $1,000. Then you don't pay anything on 102, and you pay 9% on the additional $1,000.
Amazing.
So it's really, really, really good right now. And of course, this is going to last until 2026, December 31st. So we still have a lot of time to take advantage of this.
It seems like there's a lot of benefits to relocating to UAE, and not only just taxes, but UAE continues to grow. There's so much expansion in business. It's literally really the center of the world. You have Asia, you have Africa, you have Europe, all within 6 hours or so flying time. And, you know, compared to Canada, we have corporate taxes, GST, HST tax filings. If you're self-employed, that's another sort of tax filing that you need to report on your individual tax returns. And, you know, even to add to that, on top of taxes, there's a few other reasons people are relocating to Canada. Like I said, cost of living, the weather, 6 months or 5 months of extremely cold weather. And also, people don't realize one of the main things I think people are confused about is they're going to have to get health insurance when they come to the UAE. It's going to be an out-of-pocket expense. However, our healthcare in Canada has gone very downhill, where if you go to the emergency room, it takes 9 hours to
You're not
see
going.
a nurse.
Insane, yeah.
You're not
Yeah,
going.
even to the point, I recall hearing that some hospitals close their doors in the emergency center, and people can't access doctors and hospitals. Even myself, when I want to make an appointment with my specialist, it takes me 9 months or 10 months to see them.
It's crazy.
Absolutely. And everything in the UAE, especially healthcare, is service-based. So they want to make sure that you're happy with the service that you're getting. They see you as a customer no matter, what service you're getting. So it's very, very beneficial. And to touch on the healthcare points, there are healthcare packages here in the UAE that can only cost up to 2,000 AED, which is around $545
Wow.
for the whole year.
Wow.
And they cover you up to 1 million AED in your hospital expenses, whatever that may be. So
Yeah,
there's-
so offsetting that cost from saving on taxes to paying that over here, you get amazing service. You literally can get MRIs, ultrasounds within 2-3 days and results right away.
Yeah.
And the quality of a care is above and beyond. I recall a friend of mine telling me they went to the emergency room and they had to wait over 20 minutes, and the nurses were apologizing that they had to wait that long. You will never see that in Canada. Unfortunately, there's people with broken bones, etc. in the waiting room, and nobody cares.
I've been in that position. Literally, I broke my finger and I was waiting in the ER for like 8 hours.
To take it even another step further, doctors will come to your home in the UAE.
Yes.
So you can
We've
WhatsApp.
experienced this firsthand.
Everything is on WhatsApp here. You can WhatsApp a doctor. They'll come to your house. They'll diagnose you. They'll prescribe you
That's
whatever you
insane.
need. They'll come to your house. So the UAE is all about convenience. Dubai is all about convenience, which is something you don't get in many
Yeah.
places in the world, unfortunately.
I had no idea they do that. It reminds me of those old TV shows back in the 1970s, 1980s, where doctors would make house calls. If
Wow,
that happens
yeah,
now,
yeah.
that's amazing. I'm very happy to hear that people can get that level of care. And even to add to that, a lot of our parents might get elderly. Everyone gets elderly, 70s, 80s, etc. A lot of individuals bring their parents out here because getting personal support workers and nurses to help take care of them in the
Yes,
home
yeah.
is much easier. So that's another wonderful
That's
point.
a fantastic point, actually. And mind you, all of this is in Dubai and the UAE, where everyone thinks it takes a lot of money to live. You have to be rich to live here.
Yeah.
When the reality is, you do not have to be rich to live here. Services are very cheap, very affordable, not inflated like in Canada or the UK or
Yeah.
in Spain. Or Spain's not bad, but it's very reasonable to live here. It's actually 20% cheaper to live in Dubai than it is to live in Toronto.
Wow, I had no idea.
How does that make sense,
Absolutely.
right?
I have no idea. But that's a good point, because all different types of people with all different sorts of employment live here. There's different types of neighborhoods. If you want to spend $500 on a meal or $5 on a meal,
Exactly.
Canadian dollars, it is actually possible.
Yeah.
And a good meal too.
It ranges, right? There's a budget for everyone, right? If you want to spend a lot, you can spend unlimited amounts of money on the benefits here. If you want to spend little, you can also save money in different parts of the UAE and Dubai, right? This is what we like about Dubai a lot. So
Yeah. And tell me, so when someone wants to set up a business here, I think there's something called free zones in mainland. Can you tell me more about that?
Yeah, for sure. So it's really straightforward. Depending on your business type, we could recommend you to set up in either one of the free zones or in the mainland. It depends on what your activities are. Let's say you have a physical business that requires a physical presence, then you might guess it, the mainland is where you would register your business since it's in the mainland. However, if you have an online business, if you have a marketing agency, consulting service, if you're a developer doing something online, you can even do something in person. However, it's mainly for people online. We would suggest to register your business in a free zone. It's cheaper, it's easy, it's quick. You don't even have to come here to register your business. You can do the entire process from home. The only thing you have to do is come here in person for a quick medical and biometrics exam. And then after a few days, you'll have your residency issued. But the entire company registration process can be done from abroad, which is so convenient. And it only takes about 1 week, under a week with us. We'll help you out.
Yeah.
And so that's exactly what people do. They'll set up a business here, and then they'll move here, gain the residency, and then open their bank accounts, and then, start their business.
Amazing.
Yeah.
And that's really good because I've heard of other companies taking up to a month to set up businesses.
Yes.
And I'm aware, based on my clients who you've helped, thank you very much,
Our
that
pleasure.
you help with the setting up the business bank account, getting the mailing address for the office, everything, right?
Exactly. So, that's really important. And I'm glad you mentioned that because I've also heard a lot of horror stories. I have a lot of clients that I didn't set up their business, but we help them with accounting now that tell me, oh, well, it's not possible to set up your business in under 30 days and have your residency done in under 30 days. And they're so adamant about this, right? But the reality is, whoever they set up their business with just did not take good care of them. Maybe they're too overwhelmed. Maybe they didn't know the process. But the reality is, it should not take long at all. It should be really quick. And, a lot of agencies don't provide that service. And I don't want to talk bad on anyone. But here at GenZone, we make sure that everything is done smoothly. And we're very transparent with the timelines, the pricing, everything. Another point that I would want to mention is, some people misadvertise prices. I'm sure you see it every day on
Definitely,
Instagram.
yeah.
You'll see like business license starting at whatever price, right? And to me, it's just false advertising because when you inquire, there's so many different hidden fees
Yeah.
and, you have to pay for this, you have to pay for this. It's like Honda trying to sell a car,
Yeah.
saying, buy a Honda Civic at $200, and then you inquire and it's like, yeah, $200 for 2 tires.
Yeah.
I don't understand that. That's kind of like a
Yeah.
tactic used here. But yeah, it's really important to have the right people to help you so that it's quick, easy, and it goes smooth. And that's what we can do.
I'm so glad that we're chatting about this because I'm a big believer in giving great customer service, client services, and especially the holistic approach with everything included,
Exactly.
plus transparency because you want to be able to trust the people you're working with.
Yeah, exactly. I mean, like when you're moving to Dubai, a lot of people are truthfully moving to reduce their taxes. Again, like I said, of course, there's so many other benefits,
Yeah.
but when you're moving to reduce your taxes, what's the most important thing? You actually reduce your taxes. Not that you think you're reducing your taxes, you actually do it. And in order to do that, it's not just, set up a business, that's it. Okay,
Yeah.
done, no taxes, I'm good. CRA, I'm good. No, you have to have a holistic approach to this, like you mentioned,
Yep.
where everything is taken care of. Because if you just set up a business, that's not enough, right?
Yep.
It's not enough, and you can get in trouble. So
Amazing.
that's why we like to work with you too, right? We can't just set up the
Amazing.
business without having the proper advisors and the proper team
Yes.
to assist these clients with, the relocation, which is extremely important.
Yeah. So we at 360 Global Tax also believe in a holistic, comprehensive approach. Even our tagline is a personal approach because we help Canadians living in 30 plus countries: Spain, Denmark, Australia, Qatar, Saudi, living in UAE, all over.
Amazing.
And we help with number one, the planning process,
Yeah.
whether that means an in-depth tax consultation, going over every single detail about your situation, how do primary ties work, how does secondary ties work, what are our recommendations for number of bank accounts, credit cards, where can you still invest into, RSP, TFSA, stocks, crypto, etc. What can you not invest into? And then if you move abroad and you take contributions or money out of your investments, what are the different tax withholding rates? And then also, a lot of people move abroad and they continue to have assets in Canada. If you have a home in Canada, it was your principal residence, you're not going to want to sell it because generally speaking, Canadian real estate doubles in about 10 years.
Yeah.
So often individuals turn their principal residence into a rental property, or they might sell property afterwards, or they might get investment income, pension income, old age security, all these different things. And we help guide you to be strategic and then also compliant so you're receiving the right tax slips so that you're doing the correct non-resident tax withholdings. Because when you become a non-resident, multiple divisions come into play. And you can't just work with any accounting firm because they rarely deal with departure-related items and
Yeah.
post-departure tax implications.
Correct, yeah.
I'll give you a quick example. We have a client in Qatar and he continued to report his Canadian income, didn't exit the Canadian tax system properly.
Wow.
His other accountant tried to fix items. It didn't work out. It took us a year and a half, but we just got $50,000 back refunded from the CRA. And we're still going to work on another 2 years for him. So he'll probably get another 40 or 30,000.
Oh my God.
There we
Yeah.
go. You work with the right people, and that's what happens, right?
Exactly. And it's really important to exit the Canadian tax system or know what your actual tax residency status is or when do you actually become a non-resident, because If you don't exit the Canadian tax system correctly, they may assume you're still a Canadian tax resident, expect you to file Canadian tax returns, reporting your worldwide income. You may also continue to receive provincial tax credits or different things like childcare benefit if you have children. And we come across the situation where people haven't exited for years and then they're receiving all these notices from the CRA to pay back childcare benefit or GST, HST tax credits. So it's very important your situation is reviewed in detail and everything is done correctly. We do that for all of our clients. We understand they're across the world. We express mail everything. We include our mailing address. We review all notices because the CRA often makes mistakes as well.
Yeah,
Absolutely.
definitely.
And that's very important that you mentioned. So for someone that's a Canadian that wants to relocate to Dubai, move to the UAE, maybe set up a business here, get residency here, what's the first step that they should look at when becoming a non-resident of Canada?
I would say number one is doing an in-depth tax consultation so we can figure out what their ties are, primary ties, secondary ties, when do they actually become a non-resident, because the world is very global now. They may have a business here, but they might still be earning some employment income in Canada. Maybe they're still self-employed there. Or maybe they have multiple businesses across the world, multiple properties across the world. So you have to be strategic. And for example, let's say you're gonna become a non-resident and you have $50,000 and you want to put it into investments before you leave. But as a non-resident, you're no longer allowed to contribute to TFSA, tax-free savings account, because there's a penalty of 1% per month.
Yeah.
So to be strategic, before you become a non-resident, you may want to put your money into investments so you don't get that penalty. And then in future, as you take money out of your investments, it still remains tax-free. So number one is consultation to figure out your whole situation. We look at your primary ties. Another example is, let's say you move abroad, but your wife and children are still in Canada. Likely, you're still going to be considered a tax resident of Canada because your dependents and your spouse are still in Canada. So you may need to figure out the timeline of when is your family going to move abroad? Is it going to be a few months later? How long will you have to report your worldwide income to Canada? And things like that.
Great. And I think a common misconception for Canadians, we have a lot of Canadian clients that own real estate in Canada. They have a primary residence or they have a portfolio of multiple properties.
Yeah.
What should they do if they have multiple properties in Canada?
This is a fantastic question, and I'm going to answer it very, very detailed and technically in my very tax talk. So,
listen up.
yeah, often people have principal residences. They turn into rental property, or they might have a portfolio of Canadian properties. Now, the good thing is, when you live in a property as a principal residence, you're exempt from capital gains on principal residence. There's something called a principal residence exemption, and it has a plus 1 year rule. When you actually exit the Canadian tax system, we have to file a different type of tax return called a part-year Canadian departure return. It has different disclosures about property ownership, investments on capital gains, and things like that. And one of the items included on that tax return is list of properties and the fair market value. And it's for disclosure purposes only. The good thing is you don't have to pay tax on capital gain when you leave Canada, because maybe you had hundreds of thousands of dollars on gain, and not many people have lots of money lying around, like $50,000, $20,000 to pay capital gain. So tax on any capital gain on real estate is actually paid when you sell the property, right? So let's say we've helped you exit the Canadian tax system, reported your property ownership. What happens is something called a deemed disposition. Essentially, CRA seeing you sell it and buy it back at fair market value, and it's reported. Then let's say you start earning rental income as a non-resident now. Two different divisions are going to come into play for you. One is called the individuals division. That's associated with your social insurance number and where everyone files Canadian tax returns. Then there's another division called Part 13 and non-resident tax. They look after any sort of income non-residents earn, like investment income, rental income, etc. And they want to make sure tax is withheld, meaning paid upfront. And you can't skip the step of withholding tax on rental income, because the penalty for that is 25% of the gross rent plus arrears interest. So you want to make sure you do this correctly. Even if at the end of the day when you file a tax return, you're in a loss position, you can't skip this step. And if it is skipped, what happens is usually when someone sells a property down the road, 5 years, 10 years, that's when the CRA looks into your file and they say, hey, non-resident, you didn't withhold tax. Here's a penalty now of 25% of the gross rent plus arrears interest, and they're surprised. So what the Part 13 division does is they give two options to non-resident rental property owners to withhold tax. The first option we call the gross method, where I would say less than 5% of people go with this method. What happens is you have to pay 25% of your gross rent to a non-resident account every single month. Most people don't want to do that when you have property tax bills, mortgage payments, etc. And these days, people might not be making a lot of money on their rental every single month. But in this process, you're paying 25% every single month. The following year, you receive a non-resident tax slip, NR4 slip. It'll say how much tax you withheld under that account. And then the CRA actually gives you 2 years to file a specific tax return. We call it the S216 non-resident rental return, where you report your rental expenses and you're taxed on your net income. They give you 2 years because they've collected way more tax than is necessary, and you'll always be in a refund position. They're probably holding your money in an account and earning interest on it, right?
Making a little money.
Yeah. The second option, which I would say 95, even 98% of individuals go with, is called the NR6 form method. And you have to have a third party, such as an accounting firm, such as our firm, who's registered as a tax withholding agent, to sign off on the NR6 form. We don't recommend property managers or realtors do this because they're not the tax experts, and we end up cleaning up their accounts and dealing with their penalties all the time. So with this process, the NR6 method, it allows you to pay 25% of your estimated net income. Imagine you're estimating $0 a loss. You can end up paying $0 in tax upfront compared to 25% of the gross. So this process is broken down to 3 parts. Part 1, we prepare your NR6 form. It's almost like an estimate tax return for the year. Until it's filed, you have to pay 25% of the gross rent because CRA doesn't backdate the approval. So NR6 form is filed. Any payment is paid to our non-resident account. The rest of the year, you don't have to worry about any more forms or payments. We receive mail on your behalf. We include our mailing address. We make sure everything's approved correctly. The following year, we prepare an NR4 slip, and we include an exemption code, making sure that the CRA is not expecting you to pay that 25% and that all divisions understand that you were approved with the NR6 form. Then part 3, this is where it gets a little bit different. CRA has a very strict tax filing deadline because they allowed you to pay less tax of June 30th of the following year. And if you fail to file your tax return, they come after our tax firm who signed off on the NR6 form for you, and they issue a penalty or final assessment of 25% of the gross rent plus arrears interest. But we have this process set up very, very well in-house, where we help close to, I would say, almost 1,000 individuals across the world.
Wow.
Comprehensively. We don't want our clients to get penalties. We don't want to have to chase our clients for penalties. Everything's done in a very timely fashion.
That's amazing. That's a lot of detail, a lot of
Very
great
valuable info for
free
property
information.
holders.
It's important, and I want to explain the detailed process
Exactly.
Yeah.
because a lot of tax firms or a lot of individuals, they're not transparent. We're happy to share what's happening with your tax filings. We want you to be aware and understand everything, but of course, leave it up to the tax expert
Correct.
so we can manage
Exactly.
it for you.
I mean, like, you can know how something is done, but doing it yourself is a totally different thing, right? But it's still important for people to understand so they can, work with you
Yeah,
hand in hand to
absolutely.
make sure that you do it properly for them. And if you helped over 1,000 people, that's crazy.
In 30 plus countries.
That's a
Wow.
lot of people.
It's
Mostly
a lot.
Canadians, right? Or
They're all
Canadian.
Mostly Canadians, because there are non-residents and foreigners that own Canadian property still. And we help a lot of individuals moving to and living in, like I said, Spain, France, Mexico, Australia.
Wow.
And we're very, very lucky. Our clients continue to recommend us in different Facebook
For
groups,
sure.
write us reviews and things like that.
I mean, honestly,
Amazing.
that's, our type of businesses. It's great to make the content and advertise, but at the end of the day, most of our clients, and I can probably say
Yep.
for you too, come from referrals, right?
Yep,
It's,
absolutely.
you have a good experience, I'm going to recommend you to my friend, my cousin, my uncle.
Yeah.
And, it just shows the quality of service that we're giving. Like you said, it's really important to give a good service so that they're happy and they recommend you to other people.
Yeah.
And I can say we have done a lot of research, right? We've been here in Dubai for a long time, and we've done a lot of research to find proper tax consultants. And there she is right there. Because there's just a lot of people on the market. And just because they're on the market doesn't mean they should be, we should work with them and pay for their services. So
Absolutely. I talk to over 30 people a week, 20, 30 people moving across the world. I think we were talking before, and our schedules, I'll have calls at nighttime on Toronto time while I'm here in
Yes,
Dubai, Spain in the morning. So, and like I said, our tagline is a personal approach, because wherever you are in the world, even if we don't speak every single day, when we work together, and especially as a non-resident, there's multiple touch points throughout the year. Our goal is to provide you excellent service.
exactly. And same for us, right? Like we're dealing with clients from all over
Yeah.
the world. So our work hours are a little bit, sporadic
Yeah.
and might not be, 9
All
to
time
5.
zones.
Yeah.
But we're happy to always be there for people. If I have to hop on a call at 1 a.m., I will do it. I did it last week for a client. They're now coming to Dubai on Sunday. Today is Tuesday, so they're gonna be Wednesday. Anyway, we don't even know what day it is. We just focus on working every single day anyway.
Yeah, and as Canadians being here, I think it really shows that anything in the world is possible as long as you plan it properly, you're strategic, all your T's are crossed, I's are dotted, it's definitely possible.
Yeah, I mean, so this brings me to my next question. So, great question that you asked about people who have real estate, but a lot of people actually don't even have any assets. All their income is post-tax in their bank account. They don't even have, a car. They're just a digital business owner, which a lot of our clients are digital business owners. What do they have to do if they're Canadian to prepare to come to Dubai? I know you already asked your question for, people with assets, but what about just someone who doesn't have any assets and doesn't really need holistic planning, just needs to make sure that the proper things are done?
Is there a departure tax? Tell us a little bit more
Yes.
about that.
What needs to be filed, all that kind of jazz.
Great question. Let's say we reviewed your situation and we've deemed that you're a non-resident of Canada for tax purposes. Even though you don't have assets that you might need to disclose, like a boat or real estate or a car, etc., it's still important to exit you out of the Canadian tax system, where we file your departure return. We advise the CRA of your emigration date. We make sure that they have marked you as a non-resident and an immigrant effective your departure. Now, you may have some, let's say, investments or capital gains or cryptocurrency or things like that. There is capital gain on investments that are not registered investments. Registered investments are considered TFSA, RRSP. You don't have to pay tax on those. However, when you exit Canada, we have to disclose other investments such as stocks, crypto, etc., and you have to pay capital gains tax upon the departure.
Correct.
And there's a deemed disposition on that. So usually what happens is, let's say you moved May 2024, we're going to need your statement for May 2024 to figure out the book value of your investments at that point. That would be reported on your tax return the following year, and you may have some capital gains tax owing on that, and that's that. And then after you become a non-resident, we would recommend telling all your financial institutions you're a non-resident, because whoever is the payor of the income to you, such as a bank or a company such as maybe Questrade or another company, they're required then to withhold tax for you and issue you an NR4 slip. And when an NR4 slip is issued, normally the correct amount of tax has been withheld. You don't have to file a tax return or do anything more with that income.
So another great question I actually have, because a lot of our clients, set up at different times during the year. Some are smart and set up well before the new tax year, and some set up, just when it starts or in the middle or at the end. When is someone actually a non-resident of Canada? At what point do they become a non-resident for tax purposes?
This is a good question. It's not black and white, because if you look at the Income Tax Act, the big book of tax rules that all accounting firms follow, it doesn't clearly state who is a tax resident or not.
Exactly.
So what we've done is we look at different case law over the years, and CRAs come up with primary ties and secondary ties that we briefly chatted about, but it's still not black and white. So main ties is your spouse. Now, if you don't have a spouse, fairly straightforward, you don't have a primary tie there. Dependents, if your dependents are still in Canada, you're going to be considered likely a Canadian tax resident. Real estate is a primary tie. However, that's not a make or break, because let's say if you've put up your property for rent, it shows clear intention that you don't plan on staying there.
Exactly.
Yeah.
Then we have to look at your secondary ties, which could be anything such as golf memberships, library cards, your health care, etc. How many bank accounts you might have. we want to make sure your secondary ties are minimal. Now, having one or two bank accounts or credit cards is not make or break, especially if you need to continue paying some bills in Canada.
Exactly, yeah.
You know, these days you could be a non-resident of Canada for 5 years or 15 years. You don't know what the future holds, right?
Totally.
So definitely canceling all those different memberships, magazines, etc. because in court cases, CRA has looked at golf memberships. Because
Wow.
it's like, why would you keep all these memberships if you're not
Correct.
ordinarily residing and
Correct.
living in Canada, right? And then we'll have to look at, so I would say those are the main things that we look at. And then as you become a non-resident, let's say you have some Canadian employment income or Canadian contract income. That doesn't necessarily mean you're a tax resident just because you have employment income or contract income. Let's say you're a non-resident and you earn some sort of income, employment income from Canada. You'd have to report that on a non-resident Canadian tax return. So there's a multitude of different types of Canadian tax returns that individuals can file. T1 resident return, non-resident return for employment income, Section 216 non-resident return for rental income, Section 217 non-resident return for CPP income, old age security return for OAS, old age security income. So we really need to look at your situation because it's not black and white because everyone's situation is so different.
Exactly.
Wow, yes. Yeah, so that's absolutely great to know. It's very important to do everything correctly, but say someone doesn't contact a tax expert like you, what kind of fines or punishments can they face for doing everything non-correctly?
That's a good question. So I'll mention a few different potential fines that could happen. Let's say they didn't know they were a non-resident and they kept contributing to TFSA, they didn't talk to anyone. Large penalties, 1% per month, as long as the
Wow.
funds are in the account. We've had clients get over $10,000 in penalties. And there's ways to ask for forgiveness, but sometimes the CRA doesn't forgive, especially if somebody's received a notice in the past for over contributing. Then let's imagine somebody had a house in Canada and they didn't file their departure return. That means they haven't filed a certain form we call T1161, list of properties by an immigrant. Failing to submit that form results in a penalty of $2,500 per non-resident owner. Then, for example, if you didn't pay capital gains tax on your investments, there might be some tax owing and interest income on that. Then, if you didn't advise them and then you missed out on the Part 13 and non-resident divisions rules for withholdings, that's another division that's going to come into play and may assess arrears, interest, and penalties.
Wow. So it's very important to contact the right people that have a holistic approach to this. You have to look at the bigger picture. What do you have to do in Canada? What do you have to do in the UAE? Where can people contact you if they want to move to the UAE?
Absolutely. So feel free to check out our website, www.360globaltax.ca. Reach out to us at info@360globaltax.ca and also our Instagram, 360globaltax.
Awesome. Kevin, where can people find us?
Of course, if you want to contact us, you can go to www.genzone.co. We are on all social media platforms, so you can find us on Instagram, you can find us on YouTube. We post a lot of videos there, probably about one a day on average. And if you need any information about moving to Dubai, or if you need any information about, Canadian taxes or any taxes in regards to expatriating to any country, Ruby is your go-to. We can help you as well with this. But I think the most important thing to do is do it properly.
Yes.
Don't try to do it yourself, and don't try to cheat the system. The CRA is very smart. They're really smart. They want their money. So if you're trying to cheat the system, it's not going to work out for you. And I
Yes.
think we can all agree on that. They're a great organization, and we love the CRA, but you got to make sure you take care of them properly and you don't mess up anything.
Yes. It was so good to have you guys here today. GenZone, tell me, where can we find you and reach you?
Yeah, so of course we're on all social media platforms. Our website is www.genzone.co. We're on Instagram, we're on YouTube. We post a lot of educational content. So if you want to get started and learn how to set up your business in Dubai, feel free to check that page out. And of course, feel free to book a call with us.
Yes.
We offer consultation calls for all of our guests, all of our clients, and we're more than happy to help you move to Dubai. And of course, if you need help with taxes as well, contact Ruby.
Yes, please reach out. You can contact us on our website, www.360globaltax.ca. Email us at info@360globaltax.ca. We're on all social medias as well. And reach out to us for an initial call to review your situation so that we can help you make the best informed decisions as you become a non-resident and move across the world, and especially to the UAE. Thank you again.
Perfect. It was great to
Amazing.
see you today.
You
Take
too.
care,
Thank
Ruby.
you.
Take care.